when clients hire us, we tell them, because we understand the industry and because we understand trends and what's happening, if we do it right and present certain design ideas, trends, features, they should be able to reduce their FTE count, full-time employee count, by 1, maybe 2. And if you look at that, let's say it's a teller, or let's say it's a CSR, customer service rep. That could be 30 to 40 grand a year that they save. Over 5, 10 years, that's a lot of money. It isn't just saying, we don't promote that, hey, if you hire us, you can fire an employee. That's not the intent. But like in any bank, any credit union, they have turnover. And in the transaction area is arguably one of the highest turnover areas. And so if a bank or a credit union has an employee a teller that leaves or retires or moves away from town, we have had groups say they didn't have to replace them. And so how do you do that? We can't give away the secrets, but ideally one way is getting rid of the teller line and creating a space that's more conducive to what we would call a universal associate. Some banks call them CSRs. Some credit unions will call them MSRs, member service reps, versus customer service reps. But the universal associate is an employee that can open new accounts. They can do customer support, basic customer needs, but they can also do a transaction. So if a traditional bank or credit union will have, let's pretend they have 4 tellers and 4 CSRs. If we can get rid of the barrier of the teller line and create a different form of transactions, now you can take the 4 plus 4 and maybe get by with 6, because you have, instead of 4 employees that can only do transactions and 4 employees that can only do new accounts and customer support, now if you have the employees, a universal employee, doing all of that, you don't need as many employees, because we all know during the day some employees, whether it's CSRs or tellers, are twiddling their thumbs. They don't have peak times. And this is proven. We've been doing this when the technology allowed us to get rid of the teller line. We have clients since about 2006, 2007 that have done this, and they have been able to, as employees retire or leave, not replace them. And you think about a community bank in a town of 2,000 people or 3,000 people, and if they have 15 employees and somebody leaves, one person off their payroll, and they can keep operating just as well and providing good customer support, and they don't have to hire somebody back, that's huge. Don't hire us to do a hospital, because we could do the physical building. All architects are trained to do the physical building and make sure it doesn't tip over. But from a hospital standpoint, I wouldn't know the nuances of, how the timing from when an ambulance pulls up to go into the emergency room, to get the nuances of, you got to be the layout has to be accurate. And so our banks and credit unions hire us for that same reason on their side. Personally, be involved in over 500 banking projects, and our company doing 500 or 2,500 financial institution projects. We've learned the operations, and every bank and every credit union, their operations are slightly different. But all in all, the same process is when somebody comes in with $50 and needs to deposit it, there is a process of where does that money go from the teller to the head teller into the vault. We are confident we understand operations, and so the little things like what I just described about, saying we should be able to reduce their full-time employee count by 1 is real. And it has to do with us understanding, in our EvoBank research of what's going on in the industry, it's us understanding what technology allows a bank to do that. And so that's a broad brushstroke of how operationally, if you can do the math pretty quickly at 30 or 35 grand a year, that does start to add up for our community banks and credit unions.